Hi, good morning, everyone. Thank you for attending today's webinar for the Burton Chamber of Commerce, which is part of the Greater Birmingham Chamber of Commerce. For all of you that don't know who I am, my name is Kostas Damianou, and I am the Business Development Manager for the Burton Chamber of Commerce. And this morning we have Paul Grabham from R&D, who is also a patron for the Burton Chamber of Commerce. And it's the first webinar, I think, that the presenter and the host are both board. So, you know, that's a first in quite a lot of things today.
Now, from Burton.
If you encounter any technical issues, there is a description in the chat box that basically says if you log out, log back in, it usually solves all technical issues. And for all of those that haven't attended our events page for a while, it's worth going back because there is quite a few more webinars loaded on the system. They're all free. So go register to as many that you are interested in attending. So the format for today, I'm going to shortly pass you over to Paul, who's going to go through his discussion. And then we will go to the questions and answer sections. Now, the questions and answers will be answered at the end. However, we have enabled it this morning early on. So you are able to post your question by clicking the question mark, and we'll use that later on to ask Paul that relevant question. Now, enough from me. Let's move over to Paul and let's hear what he has to say regarding R&D tax credits and do you qualify for this cash reward?
All right. Okay. So basically, yeah, today I just wanted to have an interactive discussion, if we can, to go through what is the program of R&D tax credits. It's badly named. It's not a credit. It's actually a cash reward that you get. And it's not limited to just R&D. It's actually, it includes innovation. So this is a good method for companies to get funds at this time from HMRC on a fairly speedy and simple manner. And the idea is that even if you are claiming already, there's potentially room for you to increase what you're getting for people that might have used their accountant in the past, potentially getting a higher reward. Just myself, my name is Paul Grabham. I'm an associate at R&D, actually an alumni from the University of Birmingham. And my background is originally chemical engineering and then IT. And basically, I'm the guy that finds the innovation within companies to qualify a claim. So what are R&D tax credits? Well, obviously, it's the scheme that was originally launched by the EU in 2000. It's locally administered by HMRC, by a completely separate section of HMRC in that they are wanting to give the money out. They are incentivized to keep good businesses alive and incentivize companies taking a risk with R&D. It's a reward there, like I was saying, for innovation. So where a company is spending time and money to improve and innovate, basically you get rewarded and get cash back for what you've done. It's not a grant where you're asking for money for going forward. It's basically a case of you've already spent the money and we justify what you've done and then for you to get rewarded for that effort. And this is a scheme which even in the 2020 budget was made more generous in that the government both it was originally implemented by the Labour government, extended by the coalition, and then very supported now by the current Conservative government. And it's a means of, like I said, providing funds to UK businesses with a validation that it's going in the right place. So what do you get back? Well, basically, there's two levels to the scheme. One is large company and the other is SME. So what's an SME to HMRC? Well, that's 100 million or lower in terms of turnover, less than 500 employees, or 86 mil on the balance sheet. So basically, but most of the companies fall into the SME scheme. And the SME scheme is the more generous scheme. And essentially, you get close to 25% back on every valid R&D pound you've spent. So in the example of this process, we've justified your claim, and then we look at the cost that you've involved in doing the innovation. And essentially, if you say, for example, we work out you spent £200,000 on innovation, then the reward you get back will be close to £50,000. And £50,000 actually is the average claim that RAND processes. And that is tax-free back to the company. So it's a generous scheme. So large companies, very similar to the smaller SME scheme. Like you say, this is for companies over 100 million in turnover. Some rule, you've got to be profitable, which is different in large company. But essentially, you get £11 back, sorry, 11% back. So if you spend a couple 100,000, then you're going to get 22,000 back. So roughly about half as generous as the SME scheme, but obviously the numbers are a lot bigger here. I mean, you're looking at multinationals that are spending millions on innovation, and they are getting millions back. And also one myth here is that you don't have to be profitable paying corporation tax for you to qualify for this reward. Essentially, a loss-making business still gets the reward. So essentially, if you're a startup company and you haven't turned a profit yet and everything's investment, then actually the scheme turns out to be more profitable for you. HMRC is incentivizing you to become profitable and start paying tax. So actually, in that case, you're looking at getting 33% back on the innovation cost that you've spent. So just to summarize, you've got SME at 25%, the large company at 11%, and loss-making startups at 33%. So what's the benefits of this scheme? Well, obviously, money at these times in any company is rewarded to you is welcome. But the idea is that you've already spent the money, and it's there for you to invest back into the business and for you to grow and innovate more. So basically, but the difference is, though, like I said, you can spend this on what you like. It's not like a grant where you're justifying or asking for money to buy a machine or invest in some training, etc., which has conditions with it. This is purely based on, I've already done it. RAND will help you basically work out whether it qualified or not, and therefore you're rewarded on it. Most people take this as cash, so it's not a credit, like I was saying, and it's not a loan. This is basically a reward based on money you've spent. The process of going about this, processing R&D tax credits, working with us, it's very admin-like. I mean, basically, you're looking at a 1 hour, 1.5 hour interview with somebody like myself, which obviously at the moment we're doing via Zoom calls because we can't visit, obviously, people. And then we look at your accounts and we ask for a spreadsheet to be filled out by your bookkeeper. So you're looking at, in total effort, maybe maximum 3 hours, 2 to 3 hours. And then we have all the information we need to prepare the claim. And so for people to say I'm too busy, it's kind of a bit silly, really, because there isn't much time needed to process this. So what can you claim for? So basically, like I said, this is not a grant asking going forward. This is us looking at what you've done. So essentially, up to 3 years of costs we can claim for you. So we're able to go back 2 full financial years. So for example, if your financial year end was December, we would be able to look at years ending 18 and 19 and then file that together. If your year end was, say, for example, June, July, essentially there you're almost 3 years you can claim there, because we're going to be able to go back and claim 2018 and 2019. And then obviously when you roll through 2020, claim again. So what you're able to claim for is you can go back 2 full years and then do it every year as you close your accounts going forward. So in terms of the current situation, how has this been affected? Essentially, obviously the government right now is trying to keep healthy businesses alive at a time where people's business operations and revenue channels are being affected. As we've all heard, there is stimulus money out there and loans. But essentially, through HMRC, they've communicated that through our directors, is that they are motivated to actually provide funds through this channel. The reason being is that it's a very heavily validated channel. Like, it's not like it's not managed by the banks, and it's not open to potential fraud. Here, they have an existing known channel that goes through validations and checks, and they want to keep businesses that have been investing in innovation live. So what we're seeing is there was an initial disruption in terms of their processing, but now they seem to be on it and paying claims out quite speedily, to the point where I've recently had jobs where, say, for example, the end of March year end, which was actually our busiest month on record, claims being paid out in a few days. So we presented the claim on the Monday, and by the Friday, it actually was paid out by HMRC. So in terms of Brexit, I mean, basically, the UK government has already extended this scheme. So it's here to stay. So essentially, has it been impacted? I would say probably for the positive, in that the scheme is there, it's in place, HMRC is motivated to pay out to businesses. So the question is, and that's where we come in, is does your business qualify? And then we can tell you quite simply, yes, you do, and then we'll work out how much. And then like a maximum of 8 weeks, you're looking to be paid out. Now, the reason why you do want to work with somebody like us is that it's our specialty, and it's all about finding the innovation in your company. So what we find is that clients that have either done it themselves or maybe used an accountant to file it, they're leaving a lot of money on the table. And the reason being is we go and find the innovation and then create the justification and then cost it out. So the things that do qualify across businesses is whenever you're creating prototypes, creating customer samples, those kind of activities and costs, that's innovation, that's R&D, believe it or not. Proof of concepts in IT, where you actually, before going live, I'm just trying something out to see whether this is something I want to move forward for. That's innovation. Anything that involves testing, so whether it be system testing, testing in a lab, testing a business process. Testing infers that there's a trial and error process, which is core to what is R&D. Testing to find out if something works, by trying different ways to do things, streamlining processes, trying new materials. I mean, a good example where we find a lot of cost in companies is where you have a new product that you're introducing to a manufacturing line, and you're going to have a lot of material wastage in terms of ramping up from like a pilot plant for full-scale production, because you don't know the intricacies of processing that material. So you're learning. So the whole point of this scheme is that wherever you're creating IP, you're learning and on an operational or technical basis, that's innovation. So also, if you're developing bespoke technology, this is one where a lot of companies, you would generally think, no way do they have R&D innovation in. However, if you're investing in custom bespoke technology for your business to meet a unique requirement that you think you have, where you can't buy the software off the shelf, you need to develop something to enable your business, that's innovation. So reality is you can be a law firm which would never qualify for R&D or innovation rewards. But if you built, say, for example, an IT system that supported a new process to provide a new service, then that does count. It's innovation. So in the realm of custom technology, that is one area where it does allow people to claim and qualify. And then again, the last is some key words there is whenever the company's taking risk, there's ways that you haven't got it right the first time, or things have failed, new initiatives, anything where you're thinking to improve, those things are innovation. So that's what we do. We interview our clients, go through and find out what they have been doing outside of the day-to-day operations. And what we generally find, there is innovation in most UK businesses. Because if you weren't innovating, you probably wouldn't survive. So yeah, just going down a bit more, it's innovation, not just R&D. Because like I said, it's not the best. It should be called innovation rewards, to be honest. The scheme. Innovation is a lot broader. R&D is obvious things like new product development, laboratories, you've got distinct projects to introduce things. But innovation can be improvements in your existing processes and your existing business to improve it, where you're learning and making improvements to your business for a variety of different reasons. So it's not all about an R&D project for a new product or whatever. It could be you've made changes to improve things for health and safety. You've made improvements to make your environmental footprint lower. You made it something more efficient, to do things to make it a higher quality. So, and then the last point here too is that the improvements don't have to be first in the world or first in your industry. It's basically what innovation is. It's an improvement to your business operations where you have learned and created IP to improve your business. So as long as you're not taking somebody else's learnings and you're doing it within your business, well, that's valid innovation, and that activity counts for a reward. So, like I was saying, why do you work with us and not do it with an accountant? Well, the idea is that, you have somebody that has worked it in your industry or talking to you about your industry, which is understanding of the kind of things you get up to, so we can find the innovation. Generally, an accountant doesn't understand somebody's business. They account for it. So what we're doing again is that we're looking into your business. We kind of done many claims by different industries, IT companies, packaging companies, manufacturing, engineering, solar panel, all sorts. So basically the idea is that we have the experience of doing successful claims for people within most industries, even farming. And, so we're able to find the innovation. And then we're able to benchmark it. So, like I was going to get on to saying there, is that 20 to 25% of our work is doing reclaims for people. So they've heard, about our services, whatever, and then they've go, well, I've done a claim myself, but I only got X. Then we look at it, and we identify the innovation first, and then cost it out. We don't look at your books first and then say, okay, how much of that is innovation? The key here is we're able to get significant rewards back for customers. I mean, I'll give you one example where we had a client respond to an article we wrote in a chamber magazine where they were claiming £50,000 a year with their accountant. And some of our team went on site, looked at what they were doing, found all this activity that we believed to be innovation, justified it with HMRC, and got an additional £500,000 back in a claim. So it's significant what is available, and you know, the way that we approach this is, like I said, is kind of unique. It's industry process first, and then accounting for it second. With the idea is we're able to optimize and maximize the claim with still little effort from our clients. So what can you claim for? So when I was just using that example of, we found £200,000 worth of cost. Well, basically, you got staff salaries, so that's fully loaded payroll. So PAYE, national insurance, everything that comes in as part of your costs. And essentially, we attribute a percentage of people's time to innovation. So there's a lot more there than might initially meet the eye, where, for example, you know, it's not it's perfectly acceptable for us to say, okay, and a managing director of a company, 20% of his time is spent on innovation. We don't have to tag that to a specific project, but we can say, you know, that there's a lot of indirect labor that we can assign to innovation. Subcontractors that you have working for your company. So, for example, that example I was saying about building a custom system or app with a subcontractor, you know, those costs can be included as part of your R&D costs. Any materials consumed, so making samples, prototypes, all that, the cost of the materials used. Also, not forgetting wastage, as I was discussing in your process, those costs attributed, and then a portion of your utility costs, so electric, gas, water, etc. If there's innovation going on in your facilities, then we attribute a portion of those costs, and then that's when we calculate all that for the 2 years, for example, going back, and that comes up with your cost of innovation. And when I was saying maximizing the claim, what we're talking about is that we have 100% success record where we've been able to justify all our claims to HMRC. Some get reviewed, and we just have to go through it and describe what the innovation is, and you know, justify what we've put forward. But essentially, we're able to maximize it. You know, it's not. It's a case of having confidence of what we found and gaining significant rewards. And you know, we've been going around for like 11, 12 years now, and claimed over 120 million back for our clients. So you know, it's a significant return that our clients are getting with very little effort, like I was saying. I'll give you just some examples of what I'm talking about. So in terms of by industry, so try and relate this to you. Construction. So we've done quite a few claims with architects, building materials, and developers, where previously it's an industry where people don't think they do qualify. But for example, architects working on things which are energy saving, using recycled materials. So there's a lot of things, or even modular design of houses, etc. There's a lot of innovation that goes on there, and a lot of these guys are not claiming. Where once they realize, that I think most projects for an architect, you start by designing, so that is, very relevant. But again, environmentally or eco-friendly initiatives in this area do qualify for the innovation rewards. Manufacturing, a little bit more obvious, obviously, but any prototypes that you're creating for customers, trials, the wastage in ramping up production from your, sample to full production, any new products that you're putting in place, so there's a lot of scope there in a manufacturing company. Engineering, obviously, even higher percentage generally for engineering and manufacturing. Just throwing out some numbers here, manufacturing, you could say, 15-20% of somebody's costs could be in innovation. Engineering generally is higher because they're doing a lot of upfront work to a customer's asked them to fix a solution. So they're creating CAD drawings, designing prototypes, giving the client options. So there's a whole design process there. So there's a lot of trial and error upfront for an engineering company. And then IT, software, apps, etc. There's this one is hard to justify with HMRC, which is why you do need a specialist. I mean, somebody like myself, I worked in technology for 25 years or more. But basically, if you think about this here, is that, in a consultant-based industry, you're driving billable time, and then there's a lot of unbillable time. But basically, if you're putting people on unbillable projects, which are development projects, those development projects qualify for award. So again, whenever you're doing proof of concepts, client demos, industry templates, testing, obviously, and even methodologies and thoughtware, so non-technology related consulting things can qualify for innovation rewards. So actually what I would like to do, I was going to just poll you to see whether you think you do qualify based on what I was just saying. So let me see if I can do this. So yeah, so really I was just interested, based on what I've just been saying, do you think your company qualifies or don't qualify? Okay. So 67% think they do qualify. Okay, that's good. So because it is that's one statistic, is that HMRC believes 85% of companies that do qualify are not claiming. And that's basically, I think, down to either they just don't think they do qualify, and this is coming from HMRC, they want people to claim, or they think it's too good to be true. But in this case, actually, I would say, don't look the gift horse in the mouth. I mean, basically, this is a legitimate scheme that the government is wanting for companies to reinvest. And, what do you have to lose to see if you do qualify? And that's, I guess, what we're here for. Does anybody have any questions that they'd like to ask me?
Thank you for that. That was really informative. It answers a lot of my questions regarding R&D tax credits, and it has got an unfortunate name, hasn't it? Yeah. Which you pointed out right at the beginning. I do have a couple of questions, actually, and I do have one which relates to one of our viewers today, Hannah Montgomery from Gold Dust Marketing. She's a great example of a question that I would like answered, which isn't clear to me. So I understand R&D tax credits for manufacturing, prototyping, all that kind of stuff. Even when you mentioned architects about doing research about renewable energy and all that kind of stuff. Now, Hannah is really good at what she does. She's fantastic at what she does. And the videos that she puts out are very informative. And it's very clear that she's actually researched the subject quite a lot. Now, is someone that does a lot of marketing research and understands concepts that she's developed over a long period of time eligible for this kind of thing? Because obviously she has researched and innovated her subject for her own business to be able to facilitate a great business for her customers.
Yeah, so a couple of things there. One is market research itself doesn't qualify, right? But it's what I would say is, spending time to research something does, but it's tied to the outcome more. So if it's tied to an outcome that is delivering something which is innovative, then potentially yes, right? So really, you've got to understand. I've got to get a better understanding of what is she trying to achieve. But yeah, I mean, I've done claims for digital marketing companies, for example, where they've, in their case, because on the outside you think that doesn't qualify because sales and marketing is excluded, right? Market research and marketing is excluded. So how does that qualify? Well, if they've invested in new technology to deliver some of that, and also developed new approaches and techniques, then potentially yes. But yeah, it's a lot more subjective. But that's actually something you just have to look at.
Yeah. So if anyone's got any questions, please click the question mark and type them. Now, I do have a very important question. Like, I'm a very pessimistic person at times when people say I can do this for you. So how do you make money from this process if you're saying that HMRC gives us a certain percentage back? How do you get paid? How do you generate your income out of this? Does it come out of the 25%, or is there some other avenue where you generate your revenue?
Yeah, so it doesn't work like, say, an accountant will charge you a fee, like with like they do with their accounts. Where we operate is it's on a no win, no fee kind of basis. So we won't take on a claim unless we feel as though there is innovation there.
Yeah.
So that's part of the initial upfront qualification is from a 15-minute chat, I'd try and work out, is there innovation there? Is it worth bothering? And also, is there enough expenditure there to make it worthwhile for the client? Because sometimes if the company's too small or there hasn't been that much invested, there's just not enough reward there for the client to be bothered about. So the first is qualifying the claim to see, A, is it worthwhile? B, is it valid? And then essentially, we don't charge any upfront consulting costs. It's based on whatever comes back. And then we take a percentage of whatever the client gets back. I mean, generally it's 20% of what the client receives back from HMRC. So if we're not successful, we don't get paid, obviously, and it's purely a positive cash flow situation for the client.
So it's all win for the client, basically.
Right. Yeah, there won't be out of pocket, and actually, all the risk of the claim is with us. Actually, we operate as the customer's tax agent for R&D. Any questions from HMRC, we deal with directly. So if there's a question or they want to check or anything, the client doesn't have to talk to HMRC at all. So it's purely an outsourced process.
So it seems that Hannah's got something in development that she might need to speak to you about with the new arm of her business, which is quite interesting.
That's great.
Has anyone else got any questions they would like to ask Paul? So how do you differ from other R&D tax credit companies?
Well, I think first off, it's the only thing that we do. So I think some tax companies do a variety of different taxes, like capital allowance and things like that.
Yeah.
So R&D is our only focus. And I think, and second is, I think, well, I know we've been going for 12 years. I mean, the scheme itself is 20 years old, and Rand's been doing it for 12. And I think we give a very personal service where it's low effort for the client. I think what happens a lot is a lot of people where they don't work with somebody like us have to do the report themselves, and that's a lot of burden on somebody to find the time to write the report. And to be honest, it's a waste of their time, really, because they don't really know what HMRC is looking for. It's not an engineering report, which is a mistake I made when I started doing this. It's an R&D justification report. So essentially, in summary, I would say it's a low burden on the client when they deal with us. But basically, they don't have to spend much time justifying the claim. It's purely an interview that we provide. And then we do all the calculation as well. So essentially, they should be getting a higher reward back working with us with less effort. And our fees are purely justified on the net fees back to the client a lot more than if they'd gone a different route. I mean, basically, I'll give you an example. So assume we were able to claim 50 grand. The net to the client would be 40. If they did it themselves, quite easily their claim would only be, say, 25 grand.
Yeah.
So they didn't pay Rand a commission, but the net fees that they got back, A, they had to do a lot more work to get it, and B, there's less funds. So that's why we've been successful over the years, is that it really does justify working with us in terms of A, not having to do the work, but B, you do end up with more.
Yeah, no, fantastic. No, it's really cleared the subject up for me, and I'm pretty sure for everyone that's on this webinar as well, because we hear R&D tax credits more than previously, and especially when you go to events nowadays, there's always someone that does R&D tax credits, whereas a year or so ago it wasn't as common as it is now. So this morning's webinar is very clear, and as HMRC points out, 85% don't actually claim. That's a staggering percentage.
People that do qualify, and that's their criteria as well.
Yeah, it's quite mad, really, if you think about it. So everyone you speak to every week, you are most probably going to come across someone that is eligible and is not aware of it.
Yeah, and I think what I put it down to is that large companies generally are. But when you get to smaller companies, they're just not getting the advice from their accountant.
Yeah. We think we're small, we don't do, we don't prototype, we don't, manufacture something. No, we're not eligible, but obviously it's not the case.
Yeah, and also I think the relationship between small companies and their accountants is purely transactional to close your books.
Yeah.
Whereas they don't get advisory services from people like Deloitte and KPMG like you would if you're a big company.
Yeah, and they would advise when they see that you do something, they first on the ball to actually point something out to you, because obviously they've got something to gain as well.
Yeah.
Have you got any final thoughts before we close for today, or have you said everything you wanted to? Or
yeah, I would say if you think you do have a claim, just reach out to me. No commitment. I can tell you in a space of a few minutes whether there is something there for you to claim. It's like I was explaining. It's a low hassle process that potentially can get you money for your business in a matter of a few weeks, which could be significant. And right now obviously is a time where the extra cash everybody would be appreciative for. So. If you think I can help you do that, then just reach out.
Yeah, and if anyone wants any further information, don't hesitate to contact when we put you through to Paul, or you should be able to get Paul's email address as well and contact him directly. If you haven't got it, I'm happy to pass it on to you as well. Well, thank you everyone for attending today. Thank you, Paul.
Thank you.
It was very revealing webinar this morning. Much appreciated. And have a great day, everyone, or a great week. It's going to be a nice hot one.